Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering using funds from a Section 529 account to pay a mortgage while a student attends school. Sign up for Spiedel's quarterly federal tax update webinar and you'll get reliable and pertinent updates on trending tax topics. Get details on this subscription webinar series and register for a full year of updates or just the upcoming session on July 22nd at spiedel.com under webinars. IRC Section 529, Qualified Tuition Programs, was added to the Internal Revenue Code in 1996 as part of the Small Business Job Protection Act. Recent expansions of the Qualified Tuition Program provisions include the ability to use 529 funds for K-12 education, apprenticeship and post-secondary credentialing programs, student loan repayments, and Roth IRA and ABLE account rollovers. Congress isn't alone in trying to creatively use 529 funds without incurring penalties. Taxpayers are also pushing the envelope on eligible expenses, including whether a student can purchase a home and use 529 funds to pay the monthly mortgage payments while attending school. Distributions from 529s are excluded from gross income provided they do not exceed the designated beneficiary's qualified higher education expenses. Room and board costs are classified as qualified higher education expenses only if the 529 account beneficiary is an eligible student. Eligible students are enrolled at least half-time in a program leading to a degree or recognized educational credential. Half-time status is determined by the standards of the educational institution attended. 529 funds can be used for off-campus housing, including apartments or houses, but the amount that qualifies as tax-free qualified higher education expenses cannot exceed the greater of the allowance for room and board as determined by the eligible educational institution that was included in the cost of attendance for federal financial aid purposes for that specific academic period and living arrangement, or the actual invoice amount charged by the institution for students residing in housing owned or operated by the eligible educational institution. IRC Section 529 describes room and board costs broadly as reasonable costs for room and board while attending the institution. Neither the code nor IRS Publication 970, Tax Benefits for Education, specifically includes or excludes mortgage payments by name. Instead, the focus is on the cost incurred for providing housing. Because of this, there is nothing to prevent mortgage payments made by a student who attends an institution at least half-time from being classified as a qualified higher education expense, limited to the cost of attendance allowance published by the college or university attended. The cost of attendance amount is determined by each educational institution separately. Cost of attendance is published by traditional colleges and universities, as well as online-only institutions where students attend remotely. Multiple provisions in the Internal Revenue Code disallow taxpayers from claiming double benefits. For example, within the education realm, a taxpayer cannot deduct student loan interest paid for with money received tax-free through an employer's IRC Section 127 Education Assistance Program. No such provision applies with regard to the use of 529 funds for room and board. So a taxpayer who uses 529 funds to make mortgage payments can also deduct mortgage interest and property taxes as an itemized deduction, subject only to the itemized deduction limitations, for example, the acquisition debt and SALT limitations. We cover this topic in more detail in the upcoming August issue of Spiedel's Federal Tax Letter, a monthly newsletter, plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that will impact your clients. For details and to subscribe, go to spiedel.com and click Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.